So something absolutely bizarre happened today, and that's why I'm making this emergency video for Dogecoin holders. Let's talk about it. Hello guys and welcome back to Crypto Fire, where we talk about Dogecoin, cryptocurrency, and investing. Before we go any further, please keep in mind that we're giving away $100 to a random subscriber. All you have to do is like the video, subscribe, and leave a comment on your favorite cryptocurrency. Read our description for more info about it. Now, let's get started with today's video. So, let's take a look at this. Guggenheim's Scott Minerd says Bitcoin could sink to $15,000. Now this is incredibly absurd and clever on his part because earlier this month, he called Bitcoin a paradigm of the future. He also said that Bitcoin could come to the rescue when our global payment systems collapse. But now, he's saying that Bitcoin could sink to $15,000. Now I think he's doing this to instill fear in the market. And there are so many retail investors who fall for this every day. They read something like this and sell their holdings. And, as a huge institution, Guggenheim knows that the Fear and Greed Index is rising every day, which implies that people are getting back in the market. Take a look at this. The Fear and Greed Index currently stands at 22. It was at 10 only 5 days ago. Now, there are a number of reasons why he's spreading this fear. I think these institutions have a major plan in the works. Before I talk about it, let's talk a little more about Guggenheim and Scott Minerd. So first of all, Scott Minerd is the CIO of Guggenheim. And Guggenheim submitted an amendment with the Securities and Exchange Commission in November to allow it to invest up to $500 million in Bitcoin through the Grayscale Bitcoin Trust. And right now, the Grayscale Bitcoin Trust has $21.7 billion in assets under management. That is absolutely insane for a firm whose CIO says that Bitcoin is going to bottom out at $10,000 to $15,000. Now let's talk about their plan. I'll talk about why these institutions are spreading fear and how exactly they're doing it. Let's start with why. Take a look at this. Finserv Inc., a worldwide payments and financial technology company, stated that banks and credit unions of all sizes can now facilitate buying, selling, and holding Bitcoin within their digital banking platforms. Basically, Finserv has partnered with New York Digital Investment Group, which is a Bitcoin technology startup whose parent company is a $10 billion alternative asset manager. The goal of this partnership is to allow the Bitcoin option. Now Finserv has almost 10,000 financial institution clients, nearly 6 million merchant locations worldwide, and 100 million digital banking users. It is a member of the S&P 500 Index and the Fortune 500, and it claims to process over 12,000 financial transactions every second. The announcement explains that the integration with NYDIG will allow consumers to manage Bitcoin transactions directly within their financial institutions online and mobile banking portals. It'll provide users an easy way to buy, sell, and hold the popular digital asset through their trusted financial institutions. Byron Vilayer, the Chief Digital and Data Officer at Finserv, said that interest in cryptocurrency, and particularly Bitcoin, has skyrocketed over the past several years to the point that Bitcoin investing is now a commonplace activity. Now, think about this for a minute. A new integration is going to allow the clients of these huge institutions to hold Bitcoin through their bank accounts. And this is incredibly bullish news for these institutions because they know that their clients are absolutely going to love this news. And knowing this, they're trying to spread fear in the market to push out the retail investors. They'll soon be accumulating at a discount, and we should all be aware of that. And now let's talk a bit more about why they're accumulating. Mike Novogratz, the CEO of Galaxy Digital, basically said that institutional investors will see Bitcoin's price decline as an opportunity to buy. He elaborated his claims by saying that the ecosystem is so much more mature. The amount of players that are moving in are so much more mature. Every single bank is working on their own crypto project, how they can get Bitcoin to their wealthy clients. I think a lot of clients that didn't buy it the first time will see this low price level as an opportunity to buy it and get involved. So, I hope you get the idea. Now, let's talk about when these institutions plan to get back in the market to accumulate even more. Take a look at this. Institutional investment in Bitcoin to start manifesting by Q4 2021. The co-head of Galaxy Digital basically said that You can expect with all that fear and uncertainty in recent weeks to cause a flat trending market through the summer. And I think that as we pull into the fall, a lot of this institutional adoption is going to start to manifest themselves, and we should see the market take out those highs. So basically, these institutions are trying to instill fear in the market, and they're going to start accumulating in the fourth quarter. Until then, they're going to spread this fear in the hopes that Bitcoin falls to even lower lows than it already has by the fourth quarter. Now, let's talk a bit more about how they're trying to instill this fear. I just talked about Scott Minerd, but he isn't the only one. Take a look at this. A financial expert said that Dogecoin is the worst cryptocurrency in the market right now. Basically, the MD of crypto wealth platform Daxi said that, of all the cryptocurrencies available in the market, Dogecoin is the worst of them all. She also stated that the rise and fall of Dogecoin and other meme-based cryptocurrency is completely dependent on celebrity endorsements, tweets, and podcasts, which is a market manipulation and a red flag for investors. So she's trying to say two things here. Dogecoin is the worst cryptocurrency out there, and Dogecoin has no real utility. Let's verify her claims by first taking a look at the current price. So currently Dogecoin is trading at 24.2 cents and is up by 2% on the 24-hour chart. If we compare it to where it was 5 days ago, we can see that it has risen by more than 40%. I'm talking about its rise from 17 cents to 24 cents right now. So, I think it's safe to say that Dogecoin is looking pretty bullish right now, and it's far from the worst cryptocurrency out there. Even Ethereum didn't see gains like these this week. Now, let's talk about her next claim about Dogecoin having no utility. I think that's false because we can see that Dogecoin is currently accepted at over 1,400 stores already. On top of that, it's going to get updates that'll substantially increase its transaction speed and cost, which will then increase its utility too. So, as I said, this analyst is trying to instill fear in the market by making false claims. Now, let's talk about some more price predictions by analysts and websites that don't change their views every single week. Let's begin with Dan Held, the head of growth at Kraken. He said that he could see billions of users adopting Bitcoin in 10 years. He also said that the transition to a world where Bitcoin is adopted by billions of users starts with retail users, then institutional investors, and finally, governments getting involved. And I have to agree with that. Also, I think this is a bit more realistic because we're reading about how this or that institutional investor or government is getting into crypto almost every single day. Now, let's talk about the crypto billionaire Bankman-Fried's prediction. He's the founder of FTX, one of the biggest crypto trading platforms. He believes the crypto market will recover from its recent sell-off, which has seen Bitcoin lose over half of its value since April. He also said that the institutional money is still planning to come in. It's going to be months, years. You know, these are a lot of slow-moving, careful institutions that are making decade-long decisions about what they are going to do with their businesses. So basically, we could see a lot of funds coming in from these institutions in October. And as I said, they have strong reasons to get into crypto after the NYDIG and FinServ integration. So before they do get in, you need to be mindful of all this news that creates fear in the market. With that said, I'm not a financial advisor, and this isn't financial advice. I request you to do your own research before investing into cryptocurrencies. And with that, we've come to the end of this video. Thanks for watching till the end. If you enjoyed it, please consider liking and sharing it with your friends. Also, please subscribe to the channel and turn on post notifications for daily videos on Dogecoin and cryptocurrency. If you have any questions or suggestions, please leave them in the comments section below. Goodbye, take care.